Hi, I'm Dawn Thomas, Private Wealth Advisor, and I'm here with Phil Andronico to give a brief update around what has been happening in markets recently. Phil, there have been some big news items in the last couple of weeks in markets. Last week, we saw inflation data released for Australia, and this week, we saw the Reserve Bank of Australia announce an increase in interest rates. Now, let's start with inflation. What's happening there?
Yeah, so last week we saw inflation data come through from March. Printed reasonably high, around 5.1%. Even underlying inflation, which is what the Reserve Bank tends to focus on a little bit more, was at 3.7%. And really what we're seeing here is just a reflection of what's been happening more broadly around the globe. So US has had quite high inflation prints for the last few quarters, similarly in Europe. And really Australia's playing a little bit of catch up here, and this is all really born out of confluence of factors such as supply chain issues due to COVID. Obviously UK and Russian war is having an impact on the energy markets, and that inflation data has finally flowed through to Australia.
So obviously this has an implication for interest rates, and we've seen the Reserve Bank make their first interest rate increase in a long time.
Yes, so it's been just around 11 years since we've seen our first interest rate increase. So the Reserve Bank increased interest rates from 0.1 to 0.35%, so 0.25% increase in interest rates. And you've seen, the market's already sort of been starting to price in higher interest rates based off, the fact that inflation has been higher. And you can see here on this chart that inflation, the interest rates have gone up in terms of the 1-year bond yield, the 2-year bond yield, 5-year bond yield, 10-year bond yield. Really what this is sort of saying is, that interest rates are expected to be, say, in 1 year's time around 2.2%, in 10 years' time, sort of somewhere around 3.5%. So that the bond market's already starting to price some of this in, but you've seen the Reserve Bank sort of make its first move, and really what this points to is that the Reserve Bank is a bit behind the curve, and that's reflective of other central banks also. Overnight you saw the US Fed increase interest rates by 0.5 on the back of a prior increase, so they're sort of a little bit ahead of us in terms of moving on interest rates. But certainly the trend is interest rates are expected to come through further. How much of this is already priced in though in terms of bond rates? Yeah.
So it looks like interest rates might be on the move. I mean, what do you think the implications are for the markets more broadly?
Yeah, so we've already seen some of this being playing out in markets. Obviously, as those bond yields have increased, that's had an impact on fixed interest markets, particularly fixed rate bonds, where you've seen the capital value of those bonds decrease. So, it's a sort of unique situation where, haven't seen this since 1994, where bond markets lose significant amounts of money, and you also have equity markets sort of down a little bit. And, really this has been playing out more so in the US, where probably valuations are a little bit higher and they've got more tech names, things like that. So, you've seen markets react to interest rate expectations increasing already, and that's had an impact in both bond markets and equity markets. And, this has already been playing out. Fortunately in Australia, our markets held up relatively better. It's been a little bit more range bound, obviously probably benefiting from some commodities and energy type things, but other than that, the question mark now is what plays out from here. And it's a little bit scenario dependent, because obviously bond markets are already pricing in higher interest rates. You've got inflation sort of printing higher, and it will depend a little bit around what happens there. So the way we can sort of look at it is, if inflation continues to print higher, then central banks are certainly a lot further behind the curve than they think they are, and they're going to have to play a lot of catch up. Conversely, if inflation starts rolling over, maybe bond markets and forward yields have already priced a lot of that in, and you may see that sort of abate a bit. So really from our perspective, what we're trying to do is just focus on monitoring the data and then thinking about what implications that may have on portfolios.
Phil, thank you for that update on what's been happening in the markets.
All right, thank you, Dawn.